All right, we are about to make another revolution around the sun. The holidays are upon us, and we have the November data compiled for the Sacramento region real estate market. So we're going to dig into all that. First of all, like the video, subscribe, share with your friends, keep everybody up to date on what is happening in our local market, because the national news does not always match up with what's happening locally. So Fed is actually projected to meet tomorrow, and we expect them to drop the Fed funds rate another 25 basis points or 1/4%. We'll see how that goes. And depending when you watch that video, we may already have an update on that or not. If we get an update before I send the email out, I will make that update in the text. So we'll see how that goes. There's been pretty consistent expectation that they are going to drop their rate this time, so that may already be worked into the mortgage system, and we might not see much change in mortgage rates. Ideally, they remain stable. That means that the markets have expected for this to happen, and they have projected that out, and everything just cruises along as it should. We might see a little volatility. Rates could actually go up a little bit, mortgage rates that is, so we'll see. However, national debt has topped $38 trillion, and there are no signs of slowing at this point. So auto loan delinquencies, they've been stable for about a year. They are elevated. I believe they have been just under 4% of auto loans are 90 plus days delinquent. That's according to Federal Reserve data. So not great, but at least things are leveling out. And those auto delinquencies are the highest that we've seen since the 2008 financial crisis. Interesting data there. Additionally, according to Fred, commercial loans are seeing increased delinquency rates, although they are nowhere near the delinquency rate that we did see back in 2009 to 2012 when the market crashed back then. So keeping an eye on that. I will say I am getting a lot of conflicting information from different experts. Some are predicting some serious economic issues over the next 5 years. Others have said fundamentals are really strong and we might just see a little bit of a pullback and then carry on as normal. So hard to say. There are definitely some things like all the delinquencies that are concerning me. We have massive debt. That's a huge problem. However, a lot of things are doing really well and the stock market just keeps going. So again, I'm not an economist, so I'm going to stay in my lane and I'm going to talk to you about the Sacramento real estate market because that's what I know. That being said, the question that I continually get asked is, when are home prices going to come down? When are rates going to come down? The short answer is nobody knows. Things could change tomorrow and both could go up, both could go down, one could go up, one could go down. We don't know for sure. That being said, we do the best that we can to project with the data and the information that we have at any given time. So toward that, I know that housing prices, mortgage payments, rental rates, everything related to housing payments and housing costs are much higher. Those are a huge portion of income right now. That is definitely a challenge. Sometimes rent, mortgage, increased utility costs, all those things. Is it sustainable? Yes and no. Some things are going to have to change, in my opinion. In other states and other metro areas, things are changing. Some areas are down quite a bit. I know I always mention Austin, Texas, but that's often the top of the list for real estate value declines. They saw a huge bubble. That bubble popped. Do I think Sacramento has a bubble? I don't. Personally, I expect, this gridlock between buyers and sellers to continue for at least another year. The Sacramento region has been fighting low inventory for a long time. That is helping to stabilize home values and sales prices. So we do have a lot less volume than we've had in past years, but the home values have not declined nearly as much as they have in other areas. As I've said before, we hit our peak back in June of 2022. Home values in Sacramento dropped over the next 6 months, and then they have slowly been coming back. I should say they slowly came back over about a year and then did pretty flat for about the last 2 years. And I do expect that to continue. There are a lot of buyers that just can't or will not pay higher prices given where mortgage rates and home values are right now. On the flip side, many owners are not distressed and they don't have to or choose not to take a lower price. So you have this push and pull between buyers and sellers, and there's really not much that I see coming down the pipe that could potentially change this. I know I've said before, either rates have to go down significantly, home values have to go down significantly, or we need to see average or median incomes go up significantly. And I hate to say, I don't see any of those happening. The one thing that I'm watching closely could be a little bit of a concern. Again, if we do see massive job loss to where, hey, somebody has great equity and they have a great mortgage payment, but they just can't afford to make that payment because they don't have any income. That could be a different situation. So we'll be paying attention to that. However, the thing is, what's going to happen if you have, let's just say you bought at a time when things were very affordable. You have great equity, a great payment. Let's say your housing payment's $2,000 a month. You're going to pay that to go rent a house, or actually I should say you're going to pay more than that to go rent a house. So even with job loss, there may be a really big challenge to bring down home values. So again, I just don't see that happening, but I do think we're going to be pretty gridlocked for a while. All that being said, there's always an opportunity. There's always some way to maximize your home as a seller. There's always a way to negotiate as a buyer. And you wonder, how can that happen on both sides? Well, sometimes the individual situations depend, and I have to be careful how I say this. Some agents aren't as great as others. And if you get a great negotiator that knows the market, knows the data, knows how to structure an offer, that agent might be able to negotiate a much better deal for their clients. And sorry, but the principals and the agent on the other side of the deal might not come out as well. So I like to say there's always opportunity. So that being said, let's ding it. Where are we in the Tri-County area? The number of homes for sale dropped for the fourth straight month. For November, it was down 12.88%. That is a continued seasonal decline. Nothing that I'm super concerned about at this point. We see it happen every single year. Pendage dropped off by 13%. So I know we've seen a lot of pending activity over the last 6 months. That finally dropped off a little bit for the holidays, to be expected. The number of homes sold dropped by 24.1%, so almost a quarter of the market. That's quite a bit. Yes, these numbers are significant in relation to the last couple quarters, pretty normal for a quarter four. Days on market is up 2 days, so that is up to 54 days. That's the average for a home to be on the market in the area. The list price to sales price ratio held stable at 96%, so that's great news. That's been pretty stable for I think about 4 months now. But what that shows is that on average, home sellers in the area are overpricing their homes by 4%. So that's why we're seeing a lot of negotiation, a lot of price reductions, and a lot of buyers coming in and negotiating prices that are less than what the sellers are trying to get. The median sold price in the Tri-County area dropped by 3.1%. So that is down to $555,000. That is for all residential real estate, not just exclusive to single family homes. That is actually the same median price as we had back in January of this year. So we did see some price appreciation, home value increases between January and I believe about March. And then we've seen a very, very slow decline since March. And now we're down to that 555,000. You can make up your own mind what that means as far as what external factors or economic factors contributed to that decline over the last basically 8 months now. I would say even though the number of homes on the market has declined, pace of sales has declined even more. And that's done something interesting. It's actually pushed our months of inventory from 2.5 to 2.9. So that was a 15.8% increase in the months of inventory. And that is basically measured on the absorption rate of sales. So even though, as I said in the beginning, we saw the number of homes available decline, the month's worth of inventory increased because the sales pace slowed down. So kind of interesting there. Moving on to Placer County. As I've said in the past, Placer County does see very wide swings for certain events, for winter, for holidays, all that. We'll see a little bit more volatility there. So in Placer County, the number of homes for sale is down by 13.3%. Pendants are down by 15.9%, and the number of homes sold declined by 27%. So over a quarter of all the activity. Days on market saw a noticeable increase from 53 to 61 days, and the list price to sales price ratio actually dropped. So it's now down to 95%. It was holding pretty stable in Placer County at 96%. It did drop a little bit. Basically what that says, home sellers in Placer County on average are overpricing their homes by 5% right now. So I know a lot of them are being optimistic about what they can get. They all think they have, a great product to put on the market. That is not always the case. And we're seeing that in the numbers. The recent lowest list price to sales price ratio was 94%. And that was actually back in January of this year. So started out at 94, we got better, 95, 96. We were at 96 for quite a while, and now it just dropped back down to 95. The median price in Placer County for all residential real estate increased 1.7%, so it's up to 650. It was declining for 4 months after peaking in June, but we are back up to 650 now. So after some slower sales volume, the months of inventory in Placer County increased from 2.3 to 2.8 months. So pretty typical for this time of year. That's still under the 3 to 3.5 month marker that we would need to say this is really, really more of a buyer's market. I would say right now, we're still fairly balanced between buyers and sellers. Just depends what kind of a product you have to put out to the market and how well you price it, how well you clean it up, how it's marketed and presented. And I will say right now, what kind of a job your agent's doing, because there have been quite a few homes that I have called on to either get information, set up a showing for my clients or something else over the last few months. And there are a few that it has been really, really hard to get in contact with or communicate with the listing agent. And I hate to say that's really not doing those sellers a good service, because I can't get any information. I don't know what's going on. I can't report back to my buyers. My buyers go, fine, then I guess let's move on to the next one, when they could have had some serious inquiry or interest in that home. So you've got to have a great professional backing you to really maximize yourself in this market. So I've been expecting a quiet Q4 and the beginning of Q1 for 2026. So nothing out of the ordinary right now. This is the holiday season. It is what it is. So I am really expecting some strong activity once we get into probably mid-February or early February. If you're a seller, there may be a lot more competition because we've seen a lot of homes get pulled off the market. And I think that those sellers are absolutely going to reapproach the market in early spring or early 2026. So if you're a seller, there may be a lot more competition next year. That being said, that's traditionally when we also see a lot of buyers getting back into the market. So I'm really curious to see how that balance between buyers and sellers starts to evolve early 26 and in early spring, maybe late March, early April. So I'll keep you informed. We'll keep doing these updates. If you're a buyer, spring could be a great opportunity because I do expect there's going to be a lot more to choose from. Whether we see good opportunities there or, again, just really average, uninspiring homes, that remains to be seen. And also traditionally for buyers, we do see a lot of buyer activity in spring. So buyers may also see a lot more competition coming back into the market. I've said this for years. If you are a buyer or a seller and you can find a property that you like, or you can find a buyer that likes your property, honestly, November, December, January can be a really great time to get a transaction done because there's a lot less competition on both sides, a lot less listings on the market, a lot less buyers going out in the weather and the rain and during the holidays. So sometimes it can be a really great opportunity. Thanks again. I appreciate you guys. If you have any questions, reach out. I'd love to set up a one-on-one consultation to help you out with whatever it is, whether you just need some information to plan for yourself for the next few years, or whether you actually want to buy or sell a home. Contact me directly and I'll be back next month.